Wednesday meeting we've had ever, or in a long time?
In a long time.
Long time. And I appreciate people adjusting their schedule to the extent they had to, and I appreciate Chris's willingness to be flexible on the scheduling of this because I wasn't able to be here tomorrow. Welcome to the December meeting of the Albany Pine Bush Preserve Commission. Begin with introductions. There's a few, just one new face here today. So to my left is Tony Wilkinson, and then Bill Brust. Bill Bruce, sorry. Bill Brust, Bruce. Here we go. Another coffee, please. Sorry, Bill. Mike Franchini. Welcome, Mike. Steve Rice, Mike Lyons, Rick Georgeson, Karen Terbush, Don Sapos, John Brust, with a T, and Larry Eckhouse. Thank you very much. First, we'll begin by considering the minutes of our last meeting, our September meeting. Has everyone had a chance to read the minutes? If they have, then I'll accept. Yes.
I just have one question on action items. Number 5. The last item D. Is there supposed to be an action, a description of what action we took at the end of that 5D?
Resolution to direct the executive director to hire hydro firms. Motion authorized.
Doesn't describe what action was taken.
To issue an RFP and hire.
Okay, so there's nothing else. There was no vote, no motion to approve or anything like that. Okay.
Does that answer it, Mike?
Yes, it does.
Okay.
I'll make a motion to approve.
Second.
All in favor of approving the minutes, please say aye.
There's just a spelling error, I think, and I could be wrong on number 4. It's Baronhouse, B-A-R-R-E, would be my guess, but I don't. As opposed to B-A-R-R-O-N, the first page. Number 4, second line.
Where's that, Steve?
Number 4, second line.
The Baron property?
The Baron property, I think it's Baron, B-A-R-E-N.
Nope.
Oh, it's Baron. Oh, okay, my mistake.
The property is actually Baron. That's the family who
That's the
owned
family
it.
name, okay.
And
That's my mistake.
we call it the Baron House.
Okay. Great.
Interesting. Good call, though.
Good. Hey, it's good to see people going through the minutes with a fine-tooth comb. It really is.
Somebody has to.
Wow. Don't get enough of that time grading papers, huh, Steve?
It's the same focus.
Appreciate it very much, though.
Same minds.
So Mike has made a motion to consider the minutes. I believe Bill Bruce seconded that motion. All in favor of adopting the minutes, please say aye.
Aye.
Any opposed, please say nay. Okay, they are adopted unanimously. Thank you. Our next agenda item is to receive comments from the public. Is there anyone who wishes to make any comments? Seeing none, okay. We'll move on to our next item, which are reports. I've just got a couple of items that I want to bring up. The first is an update on the issue of commission member appointments. Appointed members of the commission who were appointed for a term, their terms have expired. They are continuing to serve on an indefinite basis unless and until they are replaced. We've heard from the commission members who wish to be considered for reappointment, and those requests are under consideration by the commissioner. And Chris and I actually met with Chris Ballantyne, who is the commissioner's assistant, to discuss the folks who've been on the commission and who wish to continue. And I have no doubt in my mind that those members will continue to serve. We're looking at the question of whether or not there's any members that might be replaced, and that's something that the commissioner is considering as well. Chris, is there anything you want to add to that?
No, that's good.
So we appreciate the commission members whose appointments have expired continuing to serve. You're serving a valuable role, and the meetings are enhanced by your participation, so we appreciate that. And then before we move on to commission members, I just wanted to sort of jump the gun on something that I'm sure will come up later on in the meeting as well. But I do want to take this opportunity, since it's my moment to talk, to mention that this is Mike Venuti's last meeting with the commission. Unfortunately, Mike has decided the time is right to move on to other endeavors. And speaking from just my perspective, and I'm sure you all have your own, about the great value that Mike has brought to this commission over the years. We may have another person that eventually sits in the role that Mike has now, but it'll be a long time until someone actually replaces Mike. Mike's been so valuable in so many ways. I mean, the building we're sitting in is a testimony to the great work that Mike has done. There's been so many improvements along the way. It's a fantastic facility. It's accessible to the public, and it serves hundreds of thousands of people a year. And every one of those people that come in here have a better experience because of the value that Mike has brought to the commission. So I just want to say thank you for all of your years of service and all you've done to make the facility what it is and the commission what it is. And we wish you well. And I know you've got great plans, and I hope the future brings you everything you want it to. And I just wanted to extend my personal thanks to Mike. Appreciate that. Other commission members, any items you wish to discuss? Okay, I'll turn it right over to Chris then.
Okay. I'll be brief on the update. The green update in your packet is kind of the summary that we put together of what the staff have been up to in the last quarter, just because there's some other things I want to touch on. But I would like to point out that we do have a new website that went live about 2 weeks ago. If you haven't seen it, please look at it. It's www.albanypinebush.org. It's fantastic, if I do say so myself. And I think Wendy would attest to that, because Wendy Crane took the lead on that. She worked with Aaron and I, but really was the leader, working with a firm to update our website, so it's much more user-friendly. We're getting all kinds of positive feedback, so I just wanted to recognize Wendy and say thanks for that. And those of you who are watching on the video, she's behind the video camera. A couple other things. Specifically, the issue of the commission being a public authority. We had a brief discussion about this in June, then in September. We received a letter from the Office of the State Controller in March, identifying the commission as a public authority, subject to certain provisions of the Public Authorities Law. And we waited for a follow-up letter after we submitted some information about the commission. And we received that follow-up letter in late October. That basically gives us an outline of what we need to do. And some of the things that we need to do are there's quite a bit of reporting that's required for both the Office of the State Controller and the Authority's Budget Office. And that is all done through what's called a PARIS reporting system. PARIS is an acronym for the Public Authorities Reporting Information System. It's an online system. Any of you who've worked with, or on boards of public authorities, you're familiar with it. It's very extensive. It's going to take quite a bit of time for our staff. But it's good in the fact that it adds greater transparency to who we are and what we do. And with that, it's going to probably require some more participation on the board. I'll keep that to a minimum so I can make things easier for you. But there's certain reporting things that we'll have to do, and I'll keep you updated. And we'll actually get into one of the requirements that we have to do is the second action item on our agenda. But I'll continue at every meeting updating on things that we'll be doing, and there's quite a few things that we have to do in updating our website and things like that to be in full compliance. And then finally, I just wanted to mention that the City of Albany's comprehensive plan, what they call the 2030 plan, I was selected to be on that committee. It was over a 3-year period. This committee, from a whole diverse background of people, came together, worked with over 2,000 members of the community to put together this comprehensive plan. The comprehensive plan committee met last night, formally passed a resolution to send it on to the Common Council, and now it's up to the Common Council to consider it for adoption. The Common Council will certainly take more public comments, but it's at the point now where it's really ready for implementation. So that's a big accomplishment for the City of Albany. And I think I'll leave it at that.
Thank you, Chris. Next, we'll hear from the technical committee, the well-dressed Neil Gifford.
Well, good morning. Since we last met in September, the technical committee has reviewed a total of 8 projects. And you'll see on this quarterly report, there's a chart at the beginning of this. And if you look down each of the columns per municipality, the numbers don't add up to the number that's at the bottom. That's because one project can affect more than one area. But it's a total of 8, and I just wanted to give you a brief update on 2 of them. The first of which is in the City of Albany with the habitat restoration project associated with the most recent expansion of the Albany landfill. And in 2011, they had slated to basically restore the former mobile home park to the north of the landfill to native communities. And I'm happy to report that working with the city and their consultants have completed that. There is now almost a 4-acre native plant nursery that's fully established, in addition to 2 streams, 8 other wetland communities, and everything seems to be functioning and working well. The next phase of the project is going to be meeting with the city, their consultants, the department, the DEC representatives, and the commission staff to go through and evaluate their compliance report from 2011 and their annual work plan for 2012. If anybody has any questions about the landfill habitat restoration project, I'd be glad to take them. And I'm hoping that we were able to schedule a tour, a site visit in the spring for commission members. Steve?
Could you just point it out again? It's not 31, is it?
No,
It's right there, okay.
It's right here. The entire mobile home park and all the city lands around it are now dedicated to the preserve. So it's this section of the preserve that links Connor Barron's east.
Yep.
Here's the building we're at now, links Connor Barron's east to the Barrens along Rapp Road and down by Rensselaer Lake. And the next phase of the project for next year is going to be basically restoring all of the intervening currently forested habitat between the mobile home park and Rapp Road. The second project, to briefly mention, is also in the City of Albany. The day after the last commission meeting in September, we met with representatives from the Daughters of Sarah and their consultants regarding their concept plans for a development in Full Protection Area 29. Where am I? Full Protection Area 29 is sandwiched between the Crossgates area where we've done a lot of work for Corner Blues and the Blueberry Hill section of the preserve. So they have some concepts that they're tossing around for expanding their facility, and they met with both the commission, representatives of the DEC, and biologists from the New York field office of the U.S. Fish and Wildlife Service. And at this point, they have concepts. Nothing's been submitted officially to the City of Albany yet. That's why they wanted to meet with all of the interested agencies to try and get a sense of what may be doable within that area. And the last project I want to mention that the technical committee has discussed, but it's not a development project per se, is that the commission staff and the department and the Fish and Wildlife have been working with National Grid on a habitat conservation plan for cardinal blue butterflies, and specifically a management plan for their 115 kilovolt line that runs through the preserve. This is a fee-owned right-of-way. It's National Grid owns this land. It's not land, it bisects the preserve, and it's not land that we have the ability to manage, but it contains some great habitat. So we are going to work with them through their permit from the Fish and Wildlife Service to improve the habitat. And it's going to do 2 things for us. It's going to improve the habitat, but it's also going to greatly facilitate our ability to manage the lands on either side of that power line. And we're very pleased to be able to work with National Grid, the Fish and Wildlife Service, and DEC on that project. The other projects that are in the packet are more or less updates of projects we've discussed previously. Thank you.
Thanks, Neil. The feedback I've heard from Carl Parker about your work with the city's consultant has been really fantastic. So keep up the great work. It's good to hear. Next, we'll hear from Mike with a report on the Discovery Center.
At our last commission meeting, we were in the process of awarding a contract to Callahan Industries for the paving of the service road. It's a porous pavement application. Since that time, on a 65-degree day in October, the surface was applied, and true to form, it's doing exactly what it's supposed to do. I think a few days later, Jesse and I went out with umbrellas, and one of the many rainy days we had afterwards, and watched the water simply disappear right through the asphalt pavement into the stone surface below and then into the sand. So it's working as expected, so that's really good news. The other project we've been working on for the past year or so, working with Taylor Studios and Envision Architect, getting a design for a new entrance sign for the facility. And this is what you see. That is the design. We've taken that design and put it out to bid, and actually had a successful bid process. We had 4 bidders, and the lowest bidder was a company called Sinorama, located in Syracuse, who will, during this winter and early spring, fabricate and install the sign. You'll notice the sign also has an LED component to it, which is housed at the top of the sign. So that will give us a whole new look, much more visible for people trying to find us. And just to give you an idea of the dimensions, the base of the sign is about 8 foot wide. The overall height from ground to the very top of the butterfly is 16 feet. And that's a planter at the base. On the planter there will be lights that will be directed into the sign, so it will be lit. Any questions?
I'm just curious, Mike, it says sponsored by Trustco. Are they paying for the full cost?
No, that's the tag we have to use on our logo for the endowment provided by Trustco.
Bill, they sponsored the facility overall with their $1 million endowment.
If there aren't any other questions, I would like to, Gene, follow up on your comment and say that it's been about 8 years ago, a little over 8 years ago, I stood before the commission as I introduced myself, and I spoke about how impressed I was with the staff of the Pine Bush Commission and the work that I had seen done in this very short time. My comments today are no different than they were 8 years ago. And in fact, I'm more impressed now with the amount of work and the quality of work that's being done by all of the fields, and the science, the research, the stewardship, the education. All the components have grown considerably and are doing so much more work. And the staff is even more committed to the projects that they have at hand. So it's been a wonderful team to work for and work with. And in that spirit, and I appreciate the kudos. Who doesn't? But it certainly has been a team approach to the Discovery Center. It's been the whole team that's made this possible. And I express my appreciation to the team at large. Thank you.
Thanks, Mike. Yeah. So I was going to say something and thank Mike, but I guess that's been taken away by the chair, which is what the chair should do for the executive director. I just wanted to just say thank you, Mike, for everything you've done for us. Like Gene said, without you, we wouldn't have the facility we have. We wouldn't have the well-run building, the Discovery Center, the team that you put together to help with this was just outstanding. So thank you.
Thank you, Chris.
And I did want to say, following up on Mike's report about the porous pavement, that driveway, I'd like to recognize Delaware Engineering, John Brust's firm. John's firm saved the commission about $12,000 in design documents by doing the design work pro bono for us. And we've been working directly with Mike and the contractor, so thanks, John.
Thank you, John. Next, we'll move to the financial report, which this this week, or this meeting will be a bit of a hybrid report because Chris will actually take part and, if not direct, the reporting on it. And the reason for that is because we have a new finance director, and that is Lisa Anthony. Lisa, would you stand up? Take the opportunity, everyone, to meet Lisa before you leave today. We really appreciate Lisa's joining the commission. It's a valued role, very important role, and I know the search process to hire that resulted in the hiring of Lisa was very competitive. Chris had a good opportunity to interview an awful lot of very well qualified people, and Lisa rose to the top of that process. So we're glad to have you, Lisa, and we look forward to your service. Thank you very much. Chris?
Thanks, Gene. Like Gene said, since this is Lisa's first meeting and she's only been with us for a few weeks, I said, how about I do the financial report for you? And she said that would be nice. She actually worked on this with Allison, our former director. She put the finances together, but I'll run through them for you. So if you look at the TAN insert in your board packet, you take a look at the first page, that's the income statement. Looking at revenue right at the top, budget versus actual and what percentage of budget, remembering that budget is at the point that we're at for the period ending October 31st. Dues and contributions are up. Most of that continues to come from program revenue and continue to see an increase in people attending programs in the Discovery Center. Government grants and contracts, that's below. That's based on our reimbursement from the state for our EPF contract. Mitigation fees are up slightly. Mitigation fees are those from the landfill tipping fees. Investment income is at 2% because that does not include the endowment. The income from the endowment, which we typically hold off on unless we need it. If we don't need it at the end of the fiscal year, I'll ask the board to roll that back into principal to continue to build up our endowment. Lease revenue is at 115% because we under budgeted the actual number. And other revenue are things like gift shop sales, which are up as well. So year to date, for a period ending October 31st, we're at about 70% revenue. If you go down and you look at expenses, personnel and fringe is running about 75%. Because we have a current opening in the staff. Travel and training is down a little bit, as is contractual. Travel and training we've been holding off on. Contractual we've held off on a little bit, but that's a timing issue. That will probably come out even by the end of the fiscal year. Communications is down because we've saved quite a bit in some of the internal IT work that we've been doing for our network, which is good. Occupancy, just about on track. Occupancy is the building, basically, and utilities. Supplies and other equipment is another line that we've held off on to be conservative. And other expenses is timing. That's about 123%. That's mostly insurance. So total expenses about 69%. So they're both more or less a wash. We have a surplus of about $103,000. Any questions? Okay. You turn the page over for the balance sheet. Net assets, if you look at this current fiscal year 2012 and you compare it to the year next to it, 2011, basically those lines are switched because what we've done is we put a large majority of that cash into a conservation and land reserve and using it just for that purpose, so we don't have so much cash sitting out there. We had talked about that before. Grants receivable, if you look in 2011, it says 473. 2012, there's nothing. That's actually a typo. That's not Lisa's fault, that's my fault when I put this together when we were working on it. Accounts receivable at $182,000, that next line down, should be in grants receivable. And that's primarily the expenses that we're waiting for from the state, from the EPF, and also we have about a $15,000 grant from U.S. Fish and Wildlife Service. We have to spend all of it and then ask for reimbursement, and we're still in the process of that. Inventory is up a little bit. That's for the Discovery Center. And then if you look, investments are about the same. So that's the primary change that you'll see is the grants receivable. And that takes us all the way down to the bottom. If you look at the total net assets, 9.055 versus 9.263, the primary change is the grants receivable outstanding. So we're doing well. Any questions? Okay. And then finally on the third page, the investment summary, starting with the reserve fund. Thanks to the recommendation of both KeyBank, our investment advisor, and the finance committee, we are now doing quite well with the reserve fund, which is our liquid fund. If you look at our annualized rate is 9.94. We're almost at 10% on liquid funding, which is very impressive. The Discovery Center endowment annualized rate is about minus 2.9 and negative 2.9, and the endowment is a negative 5.5. Remember, this is in October, the end of October, so they were lower in November and they're starting to come back up. But all in all, looking at the two endowments, they're doing pretty well. And just to follow up on that, we'll have a presentation from Mike Durant from Key in this meeting on our investments, so you can ask specific questions if you'd like. Any questions on the investments? Okay, thank you.
Okay, so we're a bit ahead of ourselves on the agenda, so what we're going to do, because KeyBank is not here yet, we'll go ahead and jump to item number 6, the action items. So if you could...
Yep, you want me to explain these?
Chris, why don't you run through those?
Sure. So if you look in your packet, action item A, which is it blue?
Yeah.
Blue. This is an update to authorizing signatory authority for financial accounts. We have to update the chairman, the treasurer, the executive director, and the director of finance and operations for the accounts that are held by Key. It's a formalization. John Brust is treasurer. That's a change from Bill Bruce being treasurer in the past on the Key accounts. And Lisa Anthony, the new director of finance and operations, is also new. So we have to pass a resolution and provide that to Key. That's what this is. Are there questions on that? Okay.
So moved.
Second.
Would all in favor of action item A as drafted, please say aye.
Aye.
Any opposed, say nay. Okay, action item A is adopted unanimously.
Thank you. Okay, let's see. Action item B. This kind of goes back to, under my report, I mentioned the Paris reporting that we're required to do as a public authority. One of the items that is very timely for us is a 5-year budget and financial plan. And that has to be submitted online by January 1st and be approved by the board. So if you look at the attachment on the behind that, the actual resolution, it gives you the breakdown of the financial plan, the 5-year plan. And the finance committee met and we discussed this. So if you look at the, I can run through this quickly and then open it up for any questions. The first line is last year. It says 3/31/2011. It says last year actual 2011. Those are the audited financials. Those are all the real numbers from last year's audit. And then the next 5 years include this current fiscal year, which is an estimation where we would finish, and then the next 4 years out through fiscal year 2016. So there's some built-in assumptions here, and that assumes that we'll continue to have revenue go up for programs and more people come to programs, that we'll sell more things at the gift shop. It has built in the increase that's already included in the new lease with the tenants. So that's an actual, that's a real cost or a real revenue. And then there's other revenues that are built in based on, for example, the increase that will happen, the tipping fees from the landfill, mitigation fees, which will start in June of this upcoming year, June of 2012. The expenses are based on the budget that we have, that we passed this current year going forward. That's what we use to come up with a 5-year projection. So this is just that, it's a projection and it's a requirement. And we have to do this, we will do this every year, we'll do this every December as part of Paris reporting. And then looking ahead to our March meeting, our next quarterly meeting, you'll have a budget for just the fiscal year 2012-13. And if there's any significant modifications in our budget that we pass to this plan, we go back to the Office of the State Controller and have to notify them if they're significant. Okay. So there are other.
Is there a percentage on what's significant? Is it a percentage of the estimated cost of that item, or?
Lisa, they didn't give us an actual percentage. I would think if it's something significant like 20%, but what we have here is fairly realistic. Looking forward. Finance Committee have any comments? Because we talked about this. No. Okay. Other questions from the board?
Some things change a lot, some things don't change much. Certainly the other operating expenses, what's the rationale for that decreasing so sharply and then staying low? I guess I'm not sure what's in that.
Under expenditures?
Operating revenues.
Other operating revenue.
Is it grants? The state grants and things.
Oh, you mean where it goes from 638 to 410, then 430?
Yeah.
638 is including. There's an extra mitigation payment. That's the audited financials. So that's 638. That was way above our budget last year. That includes one extra payment from the landfill mitigation. The current year, if you go over, Steve, the 410, that's above what's budgeted, but that's what we think we're going to get. And then incorporating the increase from the tipping fee from $1.50 to $2 a ton, that's where we go to 430 for a partial of the year.
It's the first year that's the anomaly.
Yep. And then the 450, the flat across, is based on that $2 being for a full year. Other questions?
Okay, thanks. Is there a motion to move action item B to a vote? I'll make that. Okay. Second? Okay, thanks. All in favor of adopting action item B, please say aye.
Aye.
Any opposed, say nay. Okay, action item B is adopted unanimously. Which brings us to action item C.
Did we hand out action item C? You did? Okay. Okay, this is based on, action item C is based on the Finance Committee meeting of last week. And KeyBank came and spoke to the Finance Committee as well about all of our accounts, not just the investments and the overall accounts. Going back to the meeting that we had in September, we had talked about creating this account called a repo account. And that repo account was to be set up to meet the recommendation of the auditors, where we have in our money market account, we have over $250,000. Anything over $250,000 is not FDIC insured. Recommendation of the auditors was to find another vehicle, investment vehicle, or fund to use to put that money in so it's insured. We looked into the repo account. We passed a resolution to open up a repo account. The last meeting, we had more conversations with Key and then realized by looking at the interest that that repo account would provide and the fees, it's not worth it. It's not fiscally worth the commission's effort. And one of Key's recommendations was you can simply convert your money market into a checking account. and then you have full insurance, no matter what the level is. So after discussions with the Finance Committee, the decision was this is the most fiscally prudent move on behalf of the Commission to ensure the funds is to convert the money market into a checking account. Any follow-up from the Finance Committee? Summarize, all right? Okay.
That's a function of the current interest rate environment.
That's right.
This may change at some point in the future. The Finance Committee will revisit that matter at such time as interest rates rise.
That's right. I mean, the current money market is at 10 basis points, 0.1%. So it's making very, very little interest. When interest rates come back, assuming that they will, for cash accounts, we'll probably want to revisit this. So, any other questions? Thank you, Don.
Okay, is there a motion to move action item C to a vote?
So moved.
Thank you. Okay. All in favor of adopting action item C, please say aye.
Aye.
Any opposed, say nay. Okay, action item C is adopted unanimously.
Okay. So now I can. Yeah, okay. I'm just going to excuse myself and get the folks from Key. Sure. Oh. You want to sit? You want to stand?
We can move down, or you can take the inside.
Yeah, let's move down.
Okay.
Yeah, sit here.
Good morning.
Thanks, Cindy. So from Key, we have Mike Duran and we have Cindy Barker to speak with us for our annual update on our investments and our accounts. Mike, I can turn it over to you once everybody has a packet. We're ahead. Thank you.
Excellent.
I'm already through these. Perfect.
Perfect. We've got a couple extras for that. Excellent.
All set. Okay.
Well, good morning. Thank you for having us in. First and foremost, I just want to say, obviously, thank you, for the opportunity to work with the Pine Bush Discovery Center and the endowments and the reserves. 2.5 years now, we've actually been managing the assets, and it's interesting. We had our big team meeting yesterday, just a sidebar, team meeting yesterday, and we go through things for 2012 outlook, similar to what you guys are probably covering today. And whenever there's a question, ask for questions or comments, there's silence in every segment until I start talking. I throw out the market and we start to talk about things, and it's like everybody's got an opinion and an idea and a thought and a concern and a worry. And that's our job. Our job is to be worried, be concerned, monitor the assets. And by going through and constructing a really good investment policy statement, which you have, it really sort of takes, I don't want to say the pressure off of the board or the group, but it really kind of dictates our rules and our guidelines for how we're supposed to be managing the assets. So my first piece I'd like to cover and talk about is the investment policy statement, and make sure that the one that we have on file that we are currently operating off of is the most current, and that it's still looking to be in place, or we're going to continue as such, because in the IPS, the rules and guidelines that we have really dictate how we manage the assets and the amount of risk that we take with the funds. So I think the version I have is dated October 2009, I want to say.
So the board revised it in June of 2011.
Okay.
Just for the for the reserve.
Okay. Oh, and that was the
reserves. So it switched for the two asset classes, the cash equivalents and fixed income.
0 to 50, 50, and 100?
Yep. So it basically
Okay.
switched them around.
Okay. Well, there we go. That's why we asked. No, that's actually good to know, and that's important because, again, the IPS is sort of our managing and governing document. It outlines everybody's rules, both the boards and ours. So thank you for that. So we will take this. We can have this copy.
That's yours.
All right, great. We'll take that back with us. All right. Well, just jumping into some of the investments in the asset allocations and the holdings. We covered the investment policy statement. One of the items I wanted to mention was I wasn't able to make last week's Finance Committee meeting, and I know that there were some questions brought up post the meeting just about some of the holdings, some of the assets. I'd like to cover those pretty briefly here today. But just looking at the IPS and knowing the asset ranges on the fixed income side and the equity side, our governing document dictates 25 to 60% on the fixed income side and anywhere from 25 to 60% on the equity side. What we've tried to do is keep that equity piece a little bit lower than the 60%. We're trying to be somewhat in the middle there, maybe in the 50 to 55% range. We're actually on the process of kind of lowering that now. We've been doing that over the past few months just because of the, everybody says, what's the worry about the world? And everybody says Europe. Everybody says overseas. We had some exposure to international markets, both developed markets and emerging markets. And it has put a damper on performance, but I'm going back now, I think our initial meeting and even last year's meeting, when we're talking about managing a big pool of money, even though the IPS says, well, the guidelines, or the IPS says, S&P 500 is our measuring stick. That's all well and good, but in years that the S&P is, desperately lagging the international markets and the emerging markets, the funds would then be underperforming. So when we sat down and proposed management of the assets, the idea is not to say we're going to have all S&P 500 in just U.S. companies. We're going to have international, mid-cap, small-cap, commodities, a real diversified mix to sort of lower the overall risk to the portfolio. In some years, that really does benefit. In fact, 2010 it played out really well for all our clients and Albany which included. This year, beginning half of the year, the international markets fared very well, and then August and everything fell off the side of, I guess, Europe. So when we're looking at the total mix right now, we're roughly at about 1.3 million in equity and about 750,000 in fixed income, and that is on a $2.2 million portfolio. So we're within the guidelines of the IPS. We're also within the guidelines of our internal note that we have for the portfolio, which is a growth income type strategy, which is again, our internal document that sort of guides it. Just looking at the performance, I ran last week's meeting. There was a performance page, and it's included here, and it shows the year-to-date and the calendar year 2010. But I was in absentia that day, so upon review, I realized that the since inception number was not there. However, if you look in the back folder of the presentation, I ran these this morning and added those back in just to give you an idea of how the main fund, the endowment, has performed since inception. So when we're looking at the total performance of the portfolio since inception, which is June of 2009, so about 2.5 years, annualized performance is roughly 5.75%. Actually, it isn't roughly 5.75%, it is exactly 5.75%. This is gross of fees, so this does not include the management fee on the assets. So I believe the management fee works out to be about, I want to say about 85 to 90 basis points. So you can take that down, so roughly 5% annual for the last 2.5 years. Again, thinking of the markets in general, right now, if I were to ask everybody if they thought the markets are doing well or doing poorly, I did this yesterday in our meeting, I would assume most people would say, well, it's doing poorly, the outlook is bad, things are looking negative. In reality, the S&P 500 is even for the year. So since January to today, it's basically flat. The difficulty with that is we don't all look at things in terms of calendar years. We don't look at them in terms of 6 months or 3 months. We look at it in terms of our portfolio. How are we doing? Not how am I doing for the last week or 2 months or 3 years. So when we look at performance, we're looking at not just the 2.5 years going back, we're actually looking forward, thinking, okay, how long are we going to be managing these assets? Is it just 3 years? If it's just 3 years, we need to kind of ratchet down the risk. But if we're looking at 5, 10, 15 years, the growth income objective, the exposure to Europe, the exposure to commodities, all those riskier things that have fared totally in the second half of 2011 are things we're going to want to own going forward in 2012 and 2013. So the adjustments that we're making now in the portfolio, lowering the equities, not necessarily raising the fixed income percentage, because right now there isn't a lot of value in buying bonds. I say that even though, if you look at the Barclays Aggregate Index, which again is the measuring stick dictated by the IPS, which is why I put it here. The aggregate index actually is comprised of thousands and thousands of bonds. Some are very low quality, some are triple B, double B, single B. Those have fared very, very well. So in our portfolio, we don't want to own those types of investments, and that's per discussion and per the investment grade instructions we've got. So if you think of the measuring stick on the index as Barclays Aggregate, which is the whole world of bonds, and the guidelines dictated both by the IPS and by our conversations and meetings, we're kind of playing in the really premium space and the less risky space and the conservative space. Thinking back to our original meeting, the bond piece really is supposed to be the anchor. It's the weight. It's not the part that you want to double or triple your portfolio. If it does, you're taking on way too much risk. That's what the stock side is for. So when we're looking at the aggregate index versus the portfolio, the performance is below it, but the risk factor is just not there. With the cash we're raising, with the equities we're selling, we're not putting them in bonds, because right now a 5-year treasury is paying you nothing, and a 10-year treasury is not much more than that. So what we're actually been doing is holding it off and a little bit of cash. I've actually raised the cash position up, and we will be raising that up a little bit more. And I'm probably going to be moving it to a 1 to 3 year treasury, which owns a little bit wider spread, but it actually pays about 90 basis points. So it is paying a little bit of return while we're holding that cash-like position. In terms of some of the questions or some of the concerns regarding some of the holdings, again, I don't have the sheet in front of me, but I do know the questions. There was one regarding the fixed income weights, that they were below, oh, there you go, thank you, that they were below the targets. When I look back at the IPS, the minimum range is, again, 25% on fixed income. If that's not correct, that's fine. We can adjust that. Maybe we should. But it is. But it is correct. It is correct, 25. So then the weights on the actual holdings are above 25. They're at about 35 to 40%. Yeah. So based on the way I'm viewing kind of the guidelines, we are within the boundaries. Again, if it needs to be adjusted, we can do that. Additionally, some of the holdings, too, on the fixed income side, and I'll tell you what, on tab 1, just page through for those who have the presentation books, you can take a look almost to the end of that section. There's the account summary. There's 4 pages showing the account summary. One of them, the last page, 404, would show the fixed income holdings. Now, the mix of holdings for the fixed income side of the portfolio is about $750,000 total. Of that, roughly 250 or 220 is in fixed income funds. iShares. I don't really use mutual funds on the fixed income side too often because they do get kind of costly. So the iShares are very, very, very inexpensive relative to that. But if you notice, the mixes on the fixed income side is about 220,000. The remaining portion is what we originally invested in back 2.5 years ago, individual bonds. A vast majority of them are Fannie Mae, Freddie Mac, and Federal Home Loan. So if you look at the total amount of those, it's about 278,000. That's about 12% of the portfolio overall. 2 things. If you're looking at Fannie Mae and Freddie Mac, and I used to be able to say AAA, U.S. government, had the full faith and credit. We still have the full faith and credit. Can't say AAA anymore, but I figured like AAA, basically U.S. went down a year, and now everybody still measures by us anyway, so you can call it what you want. It's kind of like a spinal tap. But somebody going to. So if you basically, if you have Fannie Mae, Freddie Mac, all of those, they're not explicitly guaranteed by the U.S. government, but they're implicitly guaranteed by the U.S. government. Meaning, 3 years ago we had the Lehman debacle and Bear Stearns and all of those, and Fannie and Freddie were salvaged, rescued. If that was an indication that nobody plans on them ever defaulting on any issues, I don't know, and our fixed income group doesn't know what will. So even owning 12% of Fannie Mae or Freddie Mac is not a large percentage in terms of the credit quality of that holding, because it is AAA. So if you look down also, even in Fannie Mae and Freddie, all of those mature this year. They mature in 2012, with the exception of one next year, 2013, excuse me. So right now we're sitting on 12%, And in the IPS, there's actually an indication, a guideline that's, or a note that mentions not owning more than 10% in any one industry or any one sector. My interpretation of that is that that would apply to corporate debt, and that would also apply to equity positions, not necessarily to government bonds, which is how Fannie and Freddie are generally classified. If I'm incorrect, we can always adjust that. I don't know that it'll matter in 22 days because one of them matures anyway, and that'll be out of the portfolio. Okay, but I just wanted to make sure we sort of address that. Going forward, I mean, right as I said, we've been raising cash. We're going to raise up a little bit more cash, probably in the 5 to 10% range, and look to redeploy that probably in the equity side in the first quarter, more so on the domestic side. Also in the individual holdings in the portfolio, they've been, for the past 2 years or so, if you had to say what type of stock holdings we had, they were more on the growth side than they were on the value side or on the dividend generating side. We shifted that away a little bit over the past 6 months, just given the fact that the recession and sort of the market correction. And we're probably going to be doing a little bit more of that. So I wouldn't say there'll be a lot of turnover in the portfolio, but where you will see it is probably some shifting internally within the equities. We're going to maintain the short-term outlook on bonds, not investing past a year or two to lock up your money for more than that. Right now, it doesn't make sense with interest rates where they are. But in overall, I mean, 5.75% annualized the last 2.5 years, given everything that's gone on in the last 2.5 years, pretty good, I would say. And I didn't mean to make that a dissertation there. It was more of a hopefully a dialogue. But that's good. Can I answer any questions for anyone? Anyone? Portfolio, market, thoughts?
Will the euro survive?
Yes.
Okay, good.
I will say yes.
We're going to go long on the euro. Is that
There you go. That's I mean, it's just amazing. It really is just amazing if you think back over the last 2 or 3 years, all the things that have gone on that you never thought would go on. U.S. government, not AAA. U.S. government in risk of default. And in Greece, 2% of the world's GDP, and yet they are the linchpin of the entire financial market because of all the additional risk that everybody took. And hopefully, finally, now we start to see that the folks over in Europe understand that they just can't turn away. They just cannot let this happen. And for a while, it was unsure. It kind of reminded me of the issue when we were deciding about increasing the debt ceiling. We all knew it had to happen. Everybody knew it had to happen, and they stood there bickering and fighting and arguing while cars veering towards the edge of the cliff, arguing over whose fault it was. And finally, they figured it out. Hopefully, that's the same case in Europe, and all the indications seem to be that it is. Because if you take away that big cloud of Europe, everything domestically is starting to look pretty good. Earnings are looking pretty good. Unemployment could be better, but it's rising. Home sales are actually somewhat increasing, less housing starts. So things here are so good, but there's all that noise from Europe that nobody can see or listen to it. You're starting to see some of the markets kind of return some of that. Again, think about just the markets in general. Europe is a disaster, down 18% year-to-date. Emerging markets, EFA, developed countries down 14%, and the S&P's flat.
Mike, one of the things is we hear about the amount of money that corporations have parked right now. And with the Fed considering a raise in interest rates, is that something that might free that up, or is there something else that might do that?
Well, they did yesterday. Bernanke spoke, and they're going to leave things unchanged, which is what the thought was. With all the monies that corporations have on the sidelines, we're looking hopefully for some of the mergers and acquisitions stuff to start kicking in, and when that starts to come back, that's a general good indicator of upside for the equity piece.
Is that the kind of thing that typically follows a schedule, like early in the calendar year, or does that not really matter?
It usually comes on the heels right after earnings season, earnings reports. But the interesting thing about looking at calendars and saying, well, in the past it's worked this way, that's gone. I mean, it's because of all the uncertainty, again, with Europe and all the other things on the plate right now, with elections coming up. A lot of that scheduled thought process that used to make sense doesn't anymore. And sometimes they get accelerated, where the distance between having a decision to make and making a decision, it used to take X period, it's taking a lot shorter. So I would say in the next, if you're handicapping it 4 to 6 months, start to look for some mergers and acquisitions. And probably, this is the old January effect. A lot of people, with all the European debt issues and people selling things at losses in 2011 to claim those losses, in 2012 in January, you sometimes get the effect of people buying back positions in those holdings. So you sort of get this faux inflated rally in January. A lot of times, the more people talk about it, the more it happens, sort of a self-fulfilling prophecy. So you may see a boost up in the equity side over the next couple of months.
Any questions? Discussion? That's great. All right. Well,
Thank you for having us here.
Appreciate you coming in for us and the time you will spend.
Yes. Happy to do it.
Glad to be here. Great.
Take care, everyone. Have a good holiday.
Thanks, Cindy. The next item on our agenda will be a presentation by Neil concerning the hydrogeologic study.
Do I have to hit it, Mike, or not? Green and blinking. Good morning again. All of you are familiar with this document. I know you've all read it from cover to cover. This is our 2010 management plan and final environmental impact statement for the preserve that we updated just a year ago. And one of the recommendations of the management plan, amongst several, was that first was a recognition that the Commission's basic knowledge of hydrogeology in the preserve is pretty limited, and two, that we would like to be able to do more with hydrogeology through our educational programming. So as a result of that, and following up on the September Commission meeting, Chris and I met, and a representative from the board, John Brust, met with several hydrogeology firms and to look at basically building our knowledge of hydrology in the preserve and then utilizing that new information and incorporating it into our educational programs, both through displays in the Discovery Center itself and through the actual educational programs that Erin and her staff do with school groups and the public at large. So as part of that investigation, we've selected a firm, H2H, to begin this investigation of hydrology in the preserve, and we're about to sign a contract with them, and they're going to do a number of things for us. And in particular, initially, what Dr. Heiser and his staff are going to do is first evaluate what is known and what's not known about the hydrology in the preserve. As I said, we in-house have not had a lot of information about this, about hydrology. And specifically, through evaluating all of the available information, Rich is really going to look at what are the gaps in information that need to be filled. So the third part of the contract that H2H is going to do for us is work with myself and other staff members to basically build and design a hydrology investigation to fill those information gaps. So in other words, so before we go, for example, and we want to know what the hydrology is doing in the preserve, before we just go and put in a bunch of wells across the preserve, whether they're shallow or deep, we first need to figure out, well, what is known what do we already know, what don't we know, and then focus the Commission's resources on filling gaps, filling what we don't know, and building a monitoring program, long-term monitoring program, and an educational program that fills that gaps and utilizes that information. So that's basically where we're at, where we are at currently with building that hydrology investigation. But one of the first things that I did was I have a hydrology professor from Plattsburgh State who I called and talked to Dr. Franzi, who did a great deal he's a fantastic hydrogeologist. And the first thing he did was direct me to the Troy office of the U.S. Geological Survey. And I met with John Williams, sorry, John. Met with John Williams and some other folks over at the USGS, and they provided me with a great deal of information. In particular, there's a report that was done in '83 that we had not been privy to before. We never came up in 3 previous iterations of updating our management plan. So John provided me with that in addition to some other information. And Chris and I thought it would be a great idea to bring John and some of his staff here to provide you basically with an introduction to the hydrology of the Albany pine bush, realizing, we spent a lot of time thinking about fire and what's happening above ground, but what's happening below ground in particular with groundwater is driving this system as much as fire. And when you start thinking about the potential implications of climate change, we really need to get a better handle on understanding how hydrology influences the ecosystem above ground, in particular a number of rare wetlands that we care about, in addition to the pine barrens, but also is there any potential that any of the actions and management that the Commission has could be influencing the water that's influencing those wetlands. So with that, I want to introduce John Williams with the U.S. Geological Survey, and he's prepared a short PowerPoint presentation, and my understanding is that John will also entertain questions from the board when he's done.
Thanks.
Thank you, John.
I want to introduce Rich Reynolds, my colleague at the USGS. What I want to do is give a brief overview of groundwater in the Pine Bush Aquifer. The aquifer underlying, the official aquifer underlying the Pine Bush is a unconsolidated sand aquifer, and groundwater occurs, is stored, and moves through small pore spaces within this sand. So any place below the water table, the sand will be fully saturated. That is, that all the pore spaces will be filled, and it's these pore spaces that allow the movement and storage of groundwater. So it's not a big underground river underneath this whole area. It's just these pore spaces that form the aquifer. The sand is a glacially derived sand. 10,000–15,000 years ago, when the glacials receded from this area, there were large proglacial lakes in which the sand was laid down and deposited in. Subsequently, a lot of the sand was reworked by winds and deposited by dunes. So what we have is shown here in yellow is the sand up to 50 feet thick, and then it grades down to a finer grain material, glacial silts and clays. Again, silts and clays, the finer grain materials that were deposited in these lakes. In some places, that contact between the sand and the silt and clay is very abrupt. In other places, it's gradational. So when you look at the aquifer, we have a sand aquifer, and that aquifer is any place below the water table where the sand is saturated is this official aquifer. And the base of the aquifer is this fine-grained silt and clay. Very hard to move water through here, much more easy to move through here. So this would be the aquifer, and this would be called the confined unit or aquitard, or aquiclude, in which there's very slow groundwater movement. The sand aquifer is dissected by a series of streams, and in many cases those streams cut all the way down through the aquifer and are actually running on the silt and clay. So the groundwater flow system here, recharge, flow, and discharge of the Pine Bush Aquifer. Recharge is from direct infiltration of precipitation and snow melt on the sand aquifer. Then groundwater flows in the subsurface from topographic high areas to topographic low areas, the surface water bodies. These are the drains for the system. So you have recharge, groundwater flow to topographic low areas, and then that groundwater flow is discharged to the streams, wetlands, surface water bodies, and becomes the base flow or the low flow for those systems. As Neil mentioned, back in the late 1970s, the U.S. just did a study in cooperation with the city on the Pine Bush Aquifer, and as part of that study, they measured low flows or base flows of streams. And what you see is these are low flow measurements, and it's what we're reporting here is an annual mean base flow in cubic feet per second per square mile. A cubic feet per second is essentially 449 gallons per minute. So this is the amount of flow at this particular point draining out of this sand aquifer. And what we're doing is we're normalizing it to the square mileage of the drainage area. And so what we're seeing is drainage base flows in the order of 1 cubic feet per second per square mile. These are very large base flows, some of the largest base flows in the state for these southern draining streams. You can see it's significantly less for the north draining streams. What this is saying is that base flow is the discharge of the recharge that's flowed through the aquifer. And so if we're looking at maybe 40 inches of precipitation, we've got 20 inches that is going to be lost by evapotranspiration and direct runoff to streams, and about 20 inches is going to infiltrate and become part of the groundwater flow system and end up as base flow. So about 50% of your water is in this type of superficial sand aquifer is recharging the aquifer system. And as I say, sustaining the base flow, sustaining the wetlands in drier times. So also as part of that study, a number of observation wells were put in. In fact, 6 observation wells were put in the Pine Bush Aquifer and monitored for a couple of years. We also have a long-term groundwater observation well on the SUNY campus as well. So if any study is going to be done, it would make sense to repeat some of those base flow, low flow measurements that were done, as well as resurrect this aquifer observation well network. So if we look at some of the data collected, the short-term project we had, we collected 2 years of data from 1979 to 1981, and these are the hydrographs, essentially the time, 1979, 1980, 1981, and this is elevation of the water level. So this would be a high water level, this would be a low water level. And if we look and put in when this study was done and what was going on hydrologically, we can see that it was in this area, here, in which after in the mid-1970s and late 1970s, we had relatively high water table. Water table is relatively high, and then due to less recharge, water table dropped. These are the seasonal variations. You know, this would be your spring high water level, and then your typical late summer high water level. But also, it looks like, you know, we've got a downward overall trend. And again, this would be less precipitation, less recharge, culminating in the drought that we had in 1981, 82. And you can see our long-term very much follows the same trends as the short-term wells. So saying that if we did resurrect these, they would give us a broader understanding of what was going on in the Pine Bush Aquifer. You can see here's an example of a well that's right by, I think, Rensselaer Lake, and it has the same sort of water level fluctuations, but they're muted due to the effect of the lake being there. So as I said, this well is a long-term well, so we have data going back to 1973 to all the way to yesterday when I downloaded this data. And so what we can see is, again, we're plotting time going from 1973 to 2011, and the depth to water. Okay, so this is the depth of water is at 7 feet here. Down here it's at 14 feet during this time. So what we see is these high water levels that were occurring over the aquifer during the late 1970s, and then due to less precipitation, we have declining water levels. that bottomed out in 81, 82, in this case almost 14 feet below land surface, from highs of 6 feet below land surface. And then you can see during the 80s, you have the natural fluctuation of 5 feet that goes on in the aquifer due to the seasonal recharge and discharge. But overall, water levels were relatively low through this whole period, all the way up to about 2002, when we had another drought and bottomed out in 2001, 2002. And then all of a sudden the rains came, and the rains have continued to come, and we can see now that this whole baseline here has shifted up to something where more like 8 feet below land surface instead of 11 or 12 feet below land surface. And these would be the seasonal peaks that we have, following the snow melts and the rains in the spring, before the evapotranspiration kicks in, before there are leaves on the trees. And we have these seasonal highs. And these are the seasonal highs that are causing the flooding problems of many basements. And it'd be very interesting to go back and see, when were these houses built? Were they built during this period right here, when the water table was maybe 5 feet? And now during seasonal highs, the water table is actually up in these basements and causing flooding problems. Here we can see, here's our peak this spring, but we also, interestingly enough, which is quite unusual, is to have another peak, and that was related to the Irene and all those September rains that we had following Irene. So it's only through this long-term type of data that we can really understand what's going on in a very transient system.
John?
Yep.
Is there an event associated with that high number?
This one right here?
Come over to your left a little bit more.
This one?
No, the high one on the...
This one?
Yeah.
Yeah, that was just one. Let's see, that would be the spring of 2007. And that was just a lot of snow melt, a lot of rain, and that actually was the first time that I think we were called out to some local residents to see some of the flooding problem that's going on in some of the neighborhoods. But yeah, we could take precipitation, snow melt, and plot this along there, and we'd see a good correlation. So the question is this jump from 2001, 2002 up here, is that something that's just happening in the pine bush, or is it something more regional in nature? And one of the very good things about the 2001 and 2002 drought is that DEC started to give us some money to resurrect our observation well network. And so from 2001, 2002, we started to build up our observation well network, and we have more of these sites that we're collecting in New York State. And here's an example of a number of them. These are all sand and gravel aquifers, all within East Central New York. And as I said, we're starting in 2002 to 2011. Here's the Albany one that we've been looking at, that jumped from the low in 2001, 2002, up to the highs that we're seeing. Here's one up in Lewis County. We can see very similar trends in that one. Oneida County, upward. Sullivan County, upward. Here's Washington County. Not as obvious, but definitely upward. And here's Rensselaer County, upward, except for it looks like we had some lack of recharge in this area. The one oddball is Saratoga County, which is up in Clifton Park, which I thought would probably be a very good analogy, because it's a lake plain sand aquifer, superficial sand aquifer, just like the pine bush. And we are seeing somewhat higher highs, but we're also seeing these lows. And I'm just wondering what's going on, and maybe some pumping going on that's affecting this, because I know just from personal experience, my neighbor, who never had to pump their basement, has pumped their basin for the last couple of years. And standing water, where I never saw standing water, is occurring. So it looks like it's not something that's just happening in the pine bush, but it's happening in East Central New York as well. And we're doing a similar type of study in Worthing, where there's some flooded basements, and there's also leakage from the New York City water tunnel. So we're trying to figure out what's, is it just the increased precipitation, or is it also related to New York City water tunnel? So one other issue, other than that I wanted to touch on, was nitrate in the pine bush aquifer. A superficial aquifer like this is essentially open to any activity at land surface. The higher the water table, the closer your aquifer is to that activity. And one thing that it's could be very sensitive to is septic disposal. And there's a number of developments that have their own on-lot septic disposal, plus they have shallow well points, which is really not a good combination. And now looking at water tables that have come up 5, 6, 7 feet, we're now looking at a very little sand between the bottom of the septic system and where the aquifer is. And Debbie Snavely, when she did the studies in the late 1970s, went out and sampled a number of domestic wells at that time. And the results are somewhat of concern, but they're not surprising, given the superficial aquifer and giving the on-lot, the use of on-lot septic systems. What we're reporting here, each one of these is a well, a domestic well that was sampled, and what we're reporting here is nitrate plus nitrite as nitrogen and groundwater from these domestic wells. Any number over about 4 milligrams per liter indicates impact from septic systems. And you can see 4 out of the 15 wells sampled had nitrate concentrations in their drinking water of greater than 4 milligrams per liter. Now the drinking water standard is 10 milligrams per liter. So it'd be very interesting to go back now 30 years later with this higher water table and also increased development and see what the nitrates have done. And it definitely is a issue of concern.
John, you teased us. I thought you were going to show up, show us the more recent data and show 4s all over the map.
Okay. Yeah. Well, we'd love to do a study. And this is an aquifer that we've got a good baseline, we've got a good background, we've got a good understanding. So a very cost-effective study could be to look at both the water levels and the water quality. Thank you.
That's great, John.
Thanks. Any questions? Yep.
You took a cubic yard or a cubic foot of the pine bush sand below the water level,
yeah,
where it's completely saturated. What percentage of the volume would actually be pore space or water? Okay,
so yeah, it's really dependent on how well sorted it is and how big those pore spaces. But we'd use a number anywhere for a glacial aquifer of 10 to 25%. It would actually be, you'd be able to get water out of that. Now, in a silt and clay, there would be a significant amount of water as well, but if you tried to drain that water out, it just wouldn't come out. But in a sand aquifer, it's something would be the order of 10, 20%, something like those are. Yep. Yep. Yes.
I was wondering what information you have about groundwater flow. Can you assume that for the most part, groundwater is flowing towards streams?
Right. So the recharge is happening everywhere in topography largely. The water table is a subdued reflection of topography. So higher topography, you're going to have a higher water level. So you can sort of look at topography and sort of come up with groundwater flow directions. To really do that, you need to have a number of observation wells and really take water level measurements to get good data. And I didn't show it, but Debbie did construct a generalized water table map for the area in 19 in 1980. So we do have that in that report. Yep.
I've dug around in around some of the wetlands in the pine bush, and it seems to me that some of them have kind of localized, what I would call a perch water table.
Yep.
They've got clay lenses, and then you dig below that lens another 20 feet, you hit a second, or maybe the primary water table. I don't know how you classify these things.
Right. So, well, I give it very simple, straightforward. It's much more complex than that. You've got clays that are going to perch water up high that would be above what we would recognize as the water table, and then you also have spot or scatter deeper aquifers as well. So it's much more complex than I presented. But that is the case, and in some cases, a wetland's going to be a reflection of the water table. In other cases, it's actually perched above the regular groundwater system, and that's all part of the fun of trying to figuring out these systems. Those wetlands that are perched, they would be the ones that would be, during a drought, be most susceptible to drying out.
Could we get a copy of these slides?
Sure. And yep.
John, actually, I had a question.
Yep.
So from '79, from the late '70s, there was a big boom in development, impervious surface. Does that have an impact on the aquifer?
Yeah. So
what is the impact?
So the impact from asphalt is going to be to route that water more quickly and not give it a time to infiltrate. And if it's routed in such a way that it gets right to one of these drains, either natural or one of the streams, it's going to get it out of the system much more quickly, and you're going to lose that recharge. Now, if it goes into an area of like one of these perched wetlands, then it may have time, and it may actually get into the system, a little bit delayed from direct. So it's really dependent on what's going on. And during drought, we're really concerned about that water. Now with these high water levels, a lot of people would like to see that water run off and get out of here. So it's a very interesting situation. But yeah, impervious surface definitely has a role. But you can see overall, I don't know what the percent increase in impervious surface. It looks like overall that the amount of precipitation is just overwhelming that, and we have higher water levels than we've had, since the 1970s, and even higher than that. Yeah.
Earlier you said that the water from the aquifer eventually drains into these rivers.
Yeah.
And then was it go into the Hudson River pattern?
Yep.
To your knowledge, I know it's probably not been looked at. With all the development in the area, including the Albany landfill and so forth, expansion, is there any guess as to these normal flows being blocked, that we're not seeing the water go down at a speed that would be historically normal in terms of the drainage, because it seems to be coming up and up and up and not dissipating, as it once did.
So one, I'm blaming it mostly on the precipitation, but any impact to that system, paving things over, or clogging streams with sediment, or any of those things, can potentially have an impact. So you would need to look at all those factors. Are these streams the same? Are they functioning the same as they were 20 years ago? All those are additional factors that are going to have an overprint on this much larger recharge caused by increased precipitation. So yeah, that's definitely. Yep.
Just a question regarding the development and deforestation. Is there any correlation to how much water penetrates into the aquifer as opposed to being absorbed by trees and so forth that have been removed from surfaces, either for developments or other clearing that's been done?
Right. So that water that comes in, a certain amount goes ET, and obviously if you remove the vegetation, that transpiration part is going to be lessened.
Is it significant, or is it kind of?
Yeah, it's really tough to say, but it could easily be looked at, in an area with some water levels before and after to see what the impact of development or removal of it.
Are there historic infrared images that show you how much deforestation may have occurred in the last 30 years that could have affected those trends that you're seeing?
Right. Yeah. So so again, that's overprinted on this much more significant increased recharge. So it's not helping the situation. But looking at it regionally, looking at precip, what percentage of those water levels be lower that for vegetation. Looking at a lot of those areas have not been changed that much in the last. So that's a good question.
Questions for John?
John and Rich, thanks for coming.
Coming in.
Great presentation.
Very much. Very helpful. Good.
Okay, we are just about on schedule, I think, perhaps a few minutes ahead. The next item on the agenda is an executive session. So we will go into executive session in about 5 minutes. If anyone wants to take a break before coming back for executive session, we can do that.
And just so people know, in executive session, we'll discuss personnel and real property negotiation. Regular session.
Okay, the first thing we'll do is to take up action item D for a vote. We had a discussion on action item D while we were in executive session. Is there anyone who wishes to move it to a vote? Okay, second. Thanks, Steve. Any discussion on item D before we vote? Okay. All in favor of adopting action item D, please say aye. Aye. Any opposed, say nay. Okay, action item D is adopted unanimously. During executive session, we also considered the issue of performance advances for the staff of the commission, including the executive director. And we agreed by unanimous consent that we would go ahead with the awarding of performance advances to all of the staff and the executive director.
Great.
So you can inform the staff of that good news before the end of the year.
Thanks. And that excludes merit and excludes
Yes.
Deficit reduction.
Yes.
Okay. Good.
Anything else? Any other items besides future meetings?
I don't think so.
Okay. Our schedule for future meetings is in the agenda. We'll see everyone again in March, and everyone has a great holiday season and a happy New Year.
Great. Thanks, everybody.
Thank you.